Hello and welcome back to Keeping It Real Estate. I'm Dan Brisse, and today's episode is part 2 of last week's Mastering Asset Management episode. And I want it to be known, this topic is vast, as I'm sure you guys are seeing, and we are at times adjusting and changing our approach as we learn more or as the market shifts. So in all reality, mastering is probably not the best word, and a better way to describe it would be probably sharpening the saw and improve your asset management and leadership skills. So in this episode, we continue to go over the critical components to asset management and show you in depth of the behind the scenes of our business. As a reminder, this audio recording, it's from a webinar for Quest Trust Company's Elite Multifamily Summit that we did a while back. And this webinar was originally presented live for around 300 attendees, but we edited it to be digestible in podcast form for your viewing pleasure. Hope you enjoy it. Pillar 4, you're going to be reviewing your financial statements with your management company. You're going to have your rent roll that you're going to be reviewing. And ideally you did a lease audit, right? When you first bought the deal with your management company, you did a lease audit. So you know exactly where you are in is how your rent roll compares to your leases. Your lease audit is going to be everything. It's going to tell you if your rent roll is actually correct or not. And you need to verify that that's correct. That's your job when you take over. It's not the seller's job to make sure it's accurate. It's your job and your management team's job. Your budget variance report is so critical in that it's your guide. Here's where we were when we closed. Here's a projection we made every single month. How are we doing month after month after month based on what we thought we would do, based on how we're doing? So your budget variance report is like your dashes in an airplane. It tells you if you're heading in the right direction or not. And that variance report is critical to be tuned into month after month, and it'll help you figure out what changes you need to make. The numbers at the end of the day don't lie. The numbers will tell you if changes need to be made. And tuning into your KPIs, your 30, 60-day occupancy trends will be important to be tuning into as well to figure out what your trends are looking like. Delinquency report. This is an incredibly important report to be monitoring weekly. It will tell you how many residents are delinquent. And I'm just totally transparent with you guys. Lower income properties right now are much, much more difficult to manage after COVID. In fact, so much that our buying criteria has changed drastically. And that doesn't mean to say some demographics aren't great still, but there are specific demographic types that are much more difficult to manage, and it's due to delinquency. It's due to, from what we can see, inflation has been ripping, as we know, since COVID, and lower income folks have been strained more and more. Their salaries aren't rising as quick as inflation, as costs are, and they don't have the financial understanding of how to budget, and they just are harder to keep paying, and there's more evictions happening, unfortunately, in a lot of the lower income demographics. So be cautious of that. You're going to want to do a cash balance review of your assets and liabilities, and just be clear on how much cash are you sitting on in the property. How much do you need to be sitting on? If there is idle cash, where could you put it so that you have income coming from the idle cash? Don't let that idle CapEx money just sit there and rot away. Get it into a high yield account. They're very easy to come by right now, where you can get at least 5%. So you are getting what your investors deserve by trusting you with their capital. Secret shops and site visits. So there's two parts of secret shopping. It's secret shopping your own asset, and then secret shopping your competitors. Up here is secret shopping your competitors. You're going to pose as a prospective tenant, and you're going to, again, get on the ground, do a phone call first, conduct these secret shops so you can get on site and get a tour of the property and see how their amenities are like. What's their on-site team like? What's the sub-market like? How's the location in comparison to yours? How do the amenities feel? Get all that information along with the rents, and you'll have a pretty good understanding of where you sit. And if you don't know that information, you really shouldn't be buying the deal yet. You only should be buying the deal when you have verified an opportunity based on what we call primary data, where you can say, based off of what we've seen with the competitors, we can do X, Y, Z, and this asset will be in a totally different position of value. What to look for in secret shops when you are shopping your own asset. You're going to be, we have people call in their own assets and just have a phone call. Are rates available? Do they ask for our information? Do they inform us about the amenities? Do they inquire how you found the property? Do they ask if you want to apply today? Do they walk you through the application process? Do they schedule a tour? Do they feel enthusiastic on the phone call and optimistic? Or are they a deadbeat and like bored and you can tell they shouldn't be in the property? These are critical to do. And, your management company really should be doing these for you. But sometimes these management companies feel busy, get busy, and they end up not doing it. So it's your job, again, as the asset manager, to make sure that the person you have on site is really an A player. And you will be able to get a feel of this, you guys, as you have weekly calls week after week after week. You're going to get a feel of if your on-site team and regional team have synergy, and if they know what they're doing. Continuing on with secret shops and site visits. So we do regular site visits. If a property is struggling, we like to be there once a week minimum. If a property is doing really, really well, we might not be there for a month. And if a property has been in our portfolio for a few years and it's just humming, we might not even go every quarter. So just, you got to decide that based off of what the asset's doing. And if it's not doing well, you might be there more than once a week. You might be there, a few days each week until you get the dang thing under control. We have a couple assets right now, one in particular where our asset manager is there at least 2 days a week because we had to make a management change, and management changes are painful. So let's continue on here. Again, bring gifts, make them feel appreciated, check on your CapEx work. You're paying a lot of money for these. You've got to be verifying that your CapEx work is done correctly. Does your management team have somebody that is putting the contract together for you and then can be out there to verify the CapEx was done up to your standard? You got to establish these expectations with your management team, or if you're going to be overseeing it with the general contractor or your team who's going to be overseeing the work being done. You're going to walk the property. You're just going to focus on these unit upgrades. What's the quality like? You're paying, it's called $7,000 a door. You walk through a rent-ready unit. Can you see the money's being spent, and is it finished to your standard and expectation? Any CapEx projects that you have together that you can be verifying. How does it look? Where are you at in the project? That's going to be all your asset manager. Very tuned in. When you close on an asset, ladies and gentlemen, you're going to have a ton of work the next 6 months, or even 12. And then it tapers off quickly. And ideally you're into this humming cruise line position of gently increasing rents and waiting for the right time to exit. You're going to want to ensure the property is upkept. Is the landscaping kept up? Is there trash everywhere? Are there broken screens everywhere? Just tuning into that and taking pictures of that, take videos of it. And when you're going through this, you may see a lot of stuff that your management company may not see. And when you're done, you might have a bunch of action item lists. What we've found is best practice is don't fire that to your on-site team all angry. Get with your regional. Send the notes and discuss with the regional, and let the regional go to your on-site team member to make the adjustments. Because if you come, and I've heard stories of this in the past where, you go and you visit your asset and you haven't been there in a couple weeks, and then 2 weeks later, you found a bunch of stuff. 2 weeks later, you're back. The same stuff is still there. Or a week later, it's still there. Well, it's easy to get angry. And all of a sudden, your on-site team, maybe they didn't get the training. Maybe they didn't get the news. I don't know exactly. But make sure you get the information to your on-site team in the correct way so you don't lose your staff. Problem solving. You are here in this business. Your job is to solve problem after problem after problem. As the asset manager, the best thing I can say is come with solution-oriented, with PMA, positive mental attitude, and no matter what comes, you're gonna want to find a way through whatever is going on at your asset. So you're going to be doing the thorough due diligence, like we've discussed, to avoid replacing any property management team members. So if you are going to be hiring a property management company, make sure you have hired a great company so you're not firing them. And this is not easy to do, you guys. You might have a great management company, and then 2 or 3 people leave because something's internally not off with that company, and that company may have more problems that start to come up. Maybe their head accountant left and they're trying to bring in a new accountant, or a couple key players leave, and all of a sudden things just aren't the same. That happens. That's happening now as property management is more difficult. We're seeing it firsthand. So when it comes to firing contractors, just ensure your contractors are detailed and clear on what they're expected to do, and then inspect their work. And it makes it pretty easy. And once you've picked the contractor, they know the scope of work, they know what to expect. If the work's not done and you got to let them go, it's a pretty easy conversation. Firing your on-site team members, this really should be more your regional team member or the owner of your management company instead of you. But you will give your opinion, like, hey, we're on these weekly calls. I can tell week after week she's not or he's not understanding and it's not picking it up at the pace we'd like to see. We think a change is needed. Totally a fair conversation. And they may push back, and you say, okay, well, here's the things that we saw. Can you help train them up and give them a little more time? But at the end of the day, you'll know pretty quickly whether your on-site team is the right team member or not. If you're going to do a capital call, ladies and gentlemen, just be honest. If the deal, maybe you have a bridge loan and your rate has run up and you have a rate cap in place and you need another one. That's a real thing that's happening right now. And you need your partners, who are your limited partners, to hang with you and get you through as you think rates are going to come down the next 12, 24 months for a chance to exit. Be very clear on what the capital is going to be used for and execute and keep that communication very open. And hopefully you as the asset manager see a very clear roadmap of where you were, where you are now, and where you're going and how you're going to get there. And your partners believe in you enough to get you there. That's your job. Lender issues, gosh, draw tracking can be challenging right now. Rebalancing of loans. I'll give you guys a real-time story. We have, out of our 16 deals that we asset manage, we have 2 that have bridge loans. The rest are fixed. But of those 2 that have bridge loans, one in particular, the lender is, I would say, a predatory lender. And the deal has done pretty well. We've done pretty good on moving the net operating income. We've got a little bit of an occupancy issue where we're resolving that. But when it came time to do a draw, we did all the CapEx work. You pay for it up front, and then you go get reimbursed. Well, the lender says, your DSCR or your numbers aren't quite where we need them to be. We're going to rebalance your loan. What that means now is they say, based off of where you are, we're going to ask for $250,000 more just to sit on it as cash reserves. So we're not going to refund you your let's just call it your draw was $350. So we'll give you back $100. We're going to keep $250. Well, now you totally are in a different position. And this is happening real time, you guys. Another reason to be very cautious of your bridge loans if you're going to do bridge loans in the future, and how much CapEx you're going to do with these lenders. In our opinion, based off of real-time data, it's just not worth it. I'd rather just raise the CapEx through investors' equity, and we can go ahead and use it as needed. And if we don't want to do the CapEx, we don't have to do it. And we're not going back and forth nitty gritty, because they will be very close on their inspection. They will be very tuned into the property. They will inspect it very, very closely. And if they start, if they start to find stuff, it makes them dig in deeper and deeper and deeper. And these draws can go on for 3, 6, 9 months if you have issues internally with the property. General partnership team is just establish clear outlines on who's doing what, who's accountable for what, and make sure that that's clear with everybody. So you don't have multiple people in charge of CapEx. You don't have multiple people in charge of the weekly meeting. Just one person. And that will help everyone with their stress levels as well. Investor relations. Can't tell you guys enough how important it is to be very, very clear with your investors on what's going on. We do monthly investor updates. We have a lot of times video updates. We're at the asset and we pull up the camera and do a quick video update. Hey, we're here at X apartment and we're doing a site visit. Here's what we saw. Here's how our team members seems. Here's what our CapEx projects are like, and you show them real time where they're at. Here's some challenges we're looking at. Here's some successes, and thanks for being a partner. It takes 2.5, 3 minutes, but it gives the limited partners who are very disconnected from the deal a chance for you to see and be there at the property with you. what is actually going on with the property. Hey, I see the actual asset managers there at the property, and it just helps them feel more confident in you as you execute your business plan. You're going to want to update them on the tax returns. When's their K1 going to be there? I can tell you right now, if you don't have K1 for investors by March 15th, you're going to get emails and you're going to have upset people. So do you have your accountant? We have an accountant at Granite Towers that works with our CPA. Are they in synergy to execute and get the documents out to the CPA so we can get our K1s on time? It's critical, critical, critical. Send your documents secure. If you got social security numbers, don't just throw that through emails. Take your time, work through your portals. You're going to want a CRM platform. We use a company called Cashflow Portal. They've been great. We know the founder of it very well. And your CRM platform is going to be critical in the ease of getting your investors signed up and them staying tuned into the SREO they need, any tax documents, any updates, any distributions. They have to be able to log in and get all that information very easily, and it'll take a lot of work off of your team as the asset manager if you have that in place. Communication best practices, response times, and handling tough investors. You're going to have some upset investors along the way if you're in this business. Anybody who's been in it long enough, you're going to get those calls, you're going to get those emails. Best thing you can do, if you are acting in your best interest and you're committed to your business and you're committed to each asset, like if you're doing this business, you probably are, you should be, you're going to have data for them and you're going to have information for them. Just share it transparently. Don't hold back and be only fluffy, only good. Just like your property management company, if they only tell you all the good stuff, but the numbers aren't there, trust starts to go away quickly. You're not in alignment. If your investor's calling you about a deal, they know something's going on. Just give them the truth. Give them as much detail as you can about the things you're concerned about and the action items you're taking and what you're doing on a week-by-week basis. And ideally, you as the general partner have far more to lose than your limited partner. All of our deals I've got more money in than most investors, and I've got a reputation along with all of us at Granite Towers. So it is as concerned as they are, you should be about 10 times more concerned about issues on your assets. Training internal team, there's two parts there. We're training Granite Towers. We're not necessarily training the property management team. That's not our employee. That's a third-party property management company employee. Now, you might have suggestions for the regional or the owner of the company to implement, but at the end of the day, it's their job to train. It's our job to train our team and make sure that we're running efficiently over at Granite Towers. As I wrap this up here into the last pillar, you're going to want to have team meetings. Communication with your management company, with your in-house team members at Granite Towers or wherever your company is. Those meetings are going to be critical just to make sure we're all moving in the same direction. We all know what success looks like. I think sometimes that's important too, is be very clear on what the outcome looks like. What does success look like? What does it look like to you as the asset manager? What does it look like to the property manager? Now are we going for the same goal? Otherwise, your property manager may think 100% occupied is success. You as the asset manager know that that's not success. That means our rents are too low. You got to move rents then. Okay, well, we got to have that conversation. They got to understand that. We talked a lot about investor relations, just the importance of staying organized is the addition here. And with what we're saying here is get that CRM platform set up as you're raising capital. Make sure that everything's very in line. Investors have their login information and they know exactly where everything is whenever they want it. You don't want to have to go and send an SREO every time or a K1 out every time. You want it to be very clear and saying, this is where your stuff is, go get it. Task management, we use Monday.com. It's a really important, valuable tool. If you guys have too much going on and you can't figure out who's doing what and what so you don't lose track of stuff, go to Monday.com, get an account. It's very cheap. And you got each person's name. And we use this more at Granite Towers. Each person's name, and here's the task, and here's the day it's due, and here's the person accountable for the success of completion. And then email management, something else we've been doing recently is, this stat here says average business owners receive 120 emails per day on average, and 30% of those are overlooked. I don't know about you guys, but I'm in the same boat. I'm always trying to get out of my emails, like I'm buried in emails. Well, we've been using someone on our team that we know pretty well to go into Mike and I's email, and they can take, let's just call it, out of the 120 emails, they take away 80 of them. because they're like, these aren't important. Or he can respond to them for us. Now I've only got X amount to take care of. Thanks for listening today, and I hope you enjoyed this 2-part series. Hopefully you gained some wonderful insight about what goes on behind the scenes in asset management. And if you want to join the list to see future investment opportunities or receive our weekly newsletter where we provide education about real estate investing and the most current data, check out our website, www.granitetowersequitygroup.com. Hit the contact us form, fill out the document, and we will get you added to our database. Thanks so much for listening. We'll catch you on the next episode.